Let me bring up the economic calendar and turn on the volume. Yeah, we should be good now. All right. Nothing like the mic being on. All right, we're good to go. Very cool. So let me bring up the economic calendar. So we're kicking into the month of, there's still no sound. Okay, let me see here. Yeah, we should be good to go now. Yeah, there's sound. All right, just give it a sec. We're good. All right, so welcome to our December 7th episode of Charts and Coffee. All right, cool. So we're going to kick this off with a quick look at the economic calendar, and then I'll keep an eye here on the chat for your questions. If you've never attended an episode of Charts and Coffee before, welcome to my office of many years. All right, so what do we do on Monday? Let's talk a little bit about what we would do on a Monday, what I like to focus on a Monday. And that's going to be a lot of the economic calendar. One of the best lists, and I'll do this on a series of sticky notes or my trading journal, whatever it is. Sticky notes are great too. Is I'll start to make note of not only the markets that are in uptrends right now. Now, why uptrends? Why not chop? Why not markets in the news? Things like that. If you go back and look at the way in which your trading P&L, your performance for the year is, for the most part, this is not going to account for everybody, but nearly everybody who sees a nice upslope on their P&L is going to notice it's happening in what we call a double green uptrend. That's where the structure of the EMAs are suggesting the path of least resistance is higher. Now, why do we look at the economic calendar? Because this is going to inject, all right, this is going to inject a certain amount of volatility, right, here you go, into the market. And this volatility is oftentimes going to be the correction, the retracement, the movement that we can capitalize on to get into one of these trends, okay? Now, I would say that today, when you scroll down the list here, let me zoom in so you guys can see this a little bit better maybe. So I would say today is going to be a fairly sedate day for economic data, scheduled economic data, and it's actually going to be pretty quiet going into Tuesday. That's not that uncommon coming after non-farm payroll, that there's a very quiet economic calendar. You keep scrolling through, not a whole heck of a lot, gang. I mean, at all until we get to Thursday with the CPI numbers, and then we get to Friday with core PPI. Now, the only thing that's for me that's catching my attention is this ECB event, because I like the way in which the dollar has continued to sink, the US dollar. That's been a great trade since before the election, and I have a huge suspicion it's going to continue to be a great trade after the election. Let me take a look here at the questions. Okay, so yeah, I do think this is going to be a really good trade that we're going to continue to see that dollar downslope on. Now, why do I care about the euro? Because the euro and the dollar have an inverse or negative correlation, which is to say that if the euro keeps strengthening, the dollar will keep being weak. And if the dollar's weak, the euro will strengthen. It's a really great way to gauge what's happening on the euro. All right. The other calendar that I will absolutely recommend my equity players keep an eye on here is the calendar. This is free, gang. You can use this for free. I don't know how many of you are familiar with this. It's a fantastic free tool, and that is the Estimize calendar. We went back to uptrends. Not only am I focused on uptrends, I'm focused on uptrends that are leading into maybe about a month and a half out from earnings. So that's what I am looking at. And so, the what, by the way, gang, what you're looking at is, I will say, even more important than how you trade it. Because you can have a little bit of margin for error, for timing, for strategy and indicator, if the underlying structure of the market has a very clear path of least resistance. So what you trade is really more important than how you're trading it. And having said that, a lot of you that are in the sector secrets mastery that I do, where my options and ETF trading, my options and stock trading, I send out alerts. And Sunday night, I think you guys just got that. If you're part of the mastery, I sent out my watch list. That's something I sent out to those folks on Sunday night. And the reason for that is that should be ready to go before I start my trading week. That watch list of names, whether it's currencies, we talked about the dollar, whether it's futures, I'm going to continue to look for the path of least resistance higher on the S&P, NASDAQ, Dow, Russell, or whether that's individual sector ETFs and stocks. Ideally, you have that ready before the bell rings on Monday. I'll get that done on Sunday evening. All right, so another fantastic way to track these trends plus events is with Estimize. Okay, so make sure, and this is really simple. Plug in your stocks. This is free, gang. Plug in your stocks so you have this nice list of follows along the left side here, as you can see. And this is how I track stocks going into earnings. That's one thing Estimize is really good at. The second thing Estimize is really good at is understanding the whisper numbers and the way in which the market is discounting expectations. That's a conversation for another time, but these are the things that I'll work into my trades. All right. Let's see here. Good morning. Good morning. Great to see everybody. Thank you for being here. No, thank you so much for being here. Very cool. All right. So let's see here. Question or comment. Nick asked, can I do a video on how I track my trades and journal? Nick, the tracking is pretty simple. The tracking is really simple. If you caught I believe it was the Thanksgiving episode, the episode that I did on Thanksgiving Day. It was about an hour long. We went a little longer on the Thanksgiving episode, but I would check that one out because what I shared with you all was, I have it running here, was Wingman Tracker, which I apparently am not logged into right now, but I use Wingman Tracker. I use a service called Wingman Tracker for that. So Wingman is how I, here, let me show you. Let's see if I can't get this up and running. But Wingman Tracker is how I look at, so basically this is how it works. So Wingman's going to run you about $25 a month. It's very reasonably priced. You can keep notes about your trades in a journal. That's great. But nothing is going to tell you more about your trading than your actual P&L and the types of trades you put on and your ratio of winners to losers. So I think that's a huge part of what I think for me is really important. Here we go. So this is my Wingman Tracker for a specific account, one of my accounts. And what I wanted to show you is it'll break down your monthly P&L. All you need to do is plug your Thinkorswim, Tasty, E-Trade. Trying to think, they have a bunch of brokers, and what you do is you don't have to do any of this manually. It's beautiful. There's a CSV file that your broker will allow you to download from your platform that just imports automatically all your trades. So for this year, let me show you here. Here's the year. Here's January to where we are right now. And so this is how I look at my performance. Now, this particular account, this is one of 5 or 6 accounts, but this particular account, just let me give you the basics of this one. So every account has some rules. Every account has rules. One account might be a day trading account. Another account might be a weekly time frame account. Another account might be collecting premium only. In other words, put credit spreads. Another account might be more directional. This is a directional trading account where the budget for each trade is approximately $2,400. So there were some as low as $1,100. There are some trades that were just above $3K, but my average position size was $2,400 worth of options. Okay. So I'd like to segregate how much I'm spending, what type of strategy I'm using, and I'll experiment constantly. So like I said, this is, I think, one of 5. I'm trying to remember how many accounts I have right now in options, ETFs, and in option stocks. So what you want to do is track it in a way where you don't want a lot of these. You don't want a lot of home runs. Okay. Notice anything below the line there, those are losses. But notice when they're smaller, and clearly you want more dots above this line than below. I think one of the worst ways that traders can study their trades is simply to look at their P&L. That's definitely the worst way to look, because it doesn't tell you anything about your typical losers, your typical winners, etc. So that's the way I look at it. So I hope that helps. Wingman tracker, and that's Nick. That's how I do it. Journaling. Journaling I'll do usually in workflowy. I'll write down a list. So for example, I mentioned Sector Secrets Mastery, which, by the way, you can check out over at simplertrading/sector. And what I do is I'll write down each sector, and then I'll write down the stocks that I want to trade in that sector. And that will give me a list. And I do that every Sunday watching football. So that's sort of the journal of it, right? I don't do the journal, Dear Diary, the market was really, I know that's not what you mean, but I think a lot of traders think that they have to have these page-long journals for every single trade. When I'm day trading, I don't have time to, get in touch with my feelings and talk about, the environment and what happened and what I drank for, what kind of coffee I drank. And, I'm only being slightly facetious, but I think a lot of times traders spend a lot of energy on a individual trade journal and not a larger, almost mission statement for their specific account and their trading. So every one of my accounts has sort of a larger encompassing set of rules. And that keeps people from having to get so granular trade to trade about journaling. I know everyone says journal your trades. What they really should say is have a mission statement for a specific account. Like I shared with you, the one that's there, and then have a mission statement for your overall trading. That's the way I look at it. Okay, so hope that helps. Next is Raghee. Last week was the first full week of trading. Bradley Johnson, how you doing, my friend? Wow, first full week. Congratulations. I took $3,500 out of the market. Very nice. Did not trade Friday at all. Love it. Love it. Friday hates traders. Not always, but for day trading, I think. It felt good to not give back anything on Friday. Fantastic. $3,500 last week in 4 trading days. Bradley, awesome. Awesome. Love it. Oh, that's fantastic. Okay, very cool. First week. I will say this now that whenever you have that good week, be especially cautious the week after, right? I remember my first really big trading year, my first 7-figure trading year. And the year after, I struggled to keep 6 figures. And there's that psychology of when you're doing really well, right? And that's fantastic. You want to tighten everything up and be a little bit more strict. I'm telling you from my own experience. So excellent, though. As far as the December 14, so that's what, a week from today. Is that going to affect trading? If anything, we'll probably see a rally after that, Al, because it will just put this whole electoral college and this whole election, we can be done with the drama that surrounded it. This is not a political thing. It's just for the market to say, oh, one less thing for us to worry about, one less thing to be concerned about. So I would largely say we'll probably see. I don't know if it's going to be a buy the rumor, sell the news event now that I think about it. I don't know that it's going to be not going to be a buy the rumor, sell the news, where the market might anticipate the electoral college vote going to the winner of the popular vote, and currently what we believe is what will reflect the electoral college vote. That's a good question. I would say, generally speaking, it's strength, though. It's strength, because it's just one less thing for the market to worry about. All right, so very cool. Yeah, Bradley, there's no reason to be nervous. There's no reason to be nervous, but I would definitely be a little bit more cautious about the way in which the market's behaving. So let's talk a little bit about market behavior. Thank you, as always, for the questions and comments, everybody. Do we have gap psychology today? We do not. We do not have gap psychology today. On the ES, we do not on the YM. And on the NQ, yes, minorly though. I mean, just barely. The high on Friday was 12,535. So we're right there. So be aware of a little bit of weakness perhaps coming in the clearing. Maybe a little bit of a gap fade on the NASDAQ. So just be aware of that. Now, if we get a gap fade, gang, I'm still interested in long side. I mentioned this for a while. It's bullish bias, long only. I'm going to start to align my V-score indicator with the current high and low of the market, and just be aware that I want to be a buyer at the bottom end of that range. Okay. And then finally, the RTY, the Russell. All right, so what we have here, the high was 93.6. Yeah, so close, but no gap psychology on RTY. So the only market that I'm thinking we could see a little bit more of a pronounced fade on is going to be the NASDAQ on the open. Doesn't mean it's a short. It doesn't mean it's a short. It simply means that because the market is opening above both the 4 p.m. close and the high of the previous session, there's likely to be a little bit of a fade. In other words, short sellers come in to fade that strength. All right. But I hope it happens. Not that I'm going to necessarily want to short the market, but because if it drives the market lower, that's where I want to be a buyer. And we have been exclusively buyers since that first Tuesday of November. So we're rolling into now, since November 3, we're a full month of long only setups in the market. Okay. All right. So next is, I started trading in a raging bull market and felt I could do no wrong. Alex, we've all been there. As one of my first mentors told me in my early 20s, and it stung. Kiddo, don't confuse an uptrend with brains, which is very true and very good advice. We all end up in that position. If we know how to differentiate uptrends from chop, however, then we know what type of approach to apply. And by the way, gang, if you haven't checked it out, a lot of these concepts that some of you might be new to, again, thank you for tuning in. A lot of these concepts that some of you might be new to, you can check out. I do this, I think two issues go out a week, 1 or 2 issues a week, and they cover concepts like what we're talking about. You know, what is gap and what is chop and what are trends and what are double greens and things like that. You can check it out at countdowntrader.com. Countdowntrader.com, which is a little bit of tip of the hat. Countdown is I'm always looking at the calendar. I'm always counting down what time of day it is. So a lot of my trading is very time-based, and we went Countdown Trader. So anyway, countdowntrader.com. Check it out. It's a free newsletter, and it will explain many of the concepts we discuss in our Charts and Coffee show. As far as TLT goes, so I'll start that conversation off with ZB. I'm still a bull in bonds, and down at this range is definitely where value area low for the year, double bottom, if you will. It's still a sideways market. Yeah, this would be an oversold buy zone for that. TT, yes. Now I'll look at ZB. I'll look at the 30-year futures, and then I'll translate that over to what I'd like to do for the 30-year bond. In that case, the ETF TLT is a great way to go. Okay, so next up is, kind of Alex. Yeah, new traders need to be aware of those market conditions changing. You know, they need to be aware of market conditions going out of chop and into trends and back into chop and back and forth. And, you know, that's very much sort of the hallmark of my work when you look at the wave and grab, which are 2 indicators that I've made freely since, you know, I've been trading. And that wave and grab is going to give you the ability to visually determine if a market's choppy or trending. And that's then going to dictate the type of strategy that you use, the type of indicators that you use. So just to compare, to show you, this area here, non-trending. That's a choppy market. A lot of folks got hurt in that area because they continued to trade the market like they had from here to here. And you notice that's a trending market. Now, the tricky thing is also focus on the long side of the market. Your directional bias is still bullish. And that's a Charles Dow thing right there. When we go into chop, that was preceded by an uptrend, I still believe the path of least resistance is up. And then you can see right in here, we've reorganized right back into an uptrend. Now that might look really basic and simple, but if you can understand that day in and day out, week in and week out, month in and month out, your trading results are going to be far, far better. That's definitely one of the main reasons why, as interesting as 2020 was with all the different shifts in the market trends, one of the reasons I was able to stay on the right side of things more often than not is because of something as basic as that. Okay. All right, gang. Let me wrap it up here. We're supposed to run the show 20 minutes. Been running at about 22, but I'll see you guys tomorrow at 9 a.m. Check out countdowntrader.com. I'll see you all here tomorrow at 9 a.m. All right. Thanks as always for being here. Catch you in the next show.